RegTech, or regulatory technology, is revolutionizing how businesses, especially in the financial sector, meet their regulatory obligations. From enhancing compliance processes to preventing fraud, RegTech leverages cutting-edge technologies to address the growing complexity of regulations in a fast-evolving digital world. Section 1. The importance of RegTech. RegTech applies modern technology to tackle challenges in compliance, monitoring, reporting, and risk management. Its significance stems from the increased regulatory demands that followed the 2008 financial crisis.
Shock and panic evident on the faces of those on the trading floor.
Lehman Brothers, a 158-year-old firm, filed for bankruptcy.
$20 trillion market in residential housing.
Financial institutions now face intricate and ever-changing regulations, making manual compliance methods cumbersome, time-consuming, and prone to errors. RegTech offers a solution by streamlining compliance processes, reducing costs, and improving accuracy. These technologies help institutions meet legal obligations and gain a competitive edge in an increasingly regulated world. Section 2. Benefits of RegTech. 1. Streamlining compliance. Traditional compliance processes are often manual and inefficient. RegTech automates these tasks using artificial intelligence, AI, blockchain, and machine learning. For instance, AI systems can monitor transactions in real time, detecting suspicious patterns like money laundering. This automation speeds up compliance and minimizes human errors. 2. Enhanced data management. In today's regulatory environment, managing vast amounts of data is essential. RegTech employs data analytics tools to analyze, store, and report data more efficiently. Blockchain technology provides secure, immutable audit trails that ensure transparency and tamper-proof records, ideal for industries like pharmaceuticals and supply chain management. 3. Risk management. RegTech enables proactive risk management through predictive analytics. By analyzing past data, these tools identify potential compliance risks before they escalate, shifting institutions from reactive to proactive risk management. 4. Cost reduction. RegTech automates routine tasks and improves efficiency, significantly reducing the costs associated with compliance. It also helps avoid regulatory fines, making it a financially appealing solution for institutions of all sizes. 5. Adaptability and agility. Regulations are constantly evolving. RegTech solutions, often cloud-based and modular, allow institutions to quickly adapt to new rules without overhauling entire systems. This agility ensures businesses remain compliant even as regulations change. Section 3. Challenges of RegTech adoption. Despite its benefits, implementing RegTech comes with challenges. 1. Integration with legacy systems. Many organizations still rely on outdated IT infrastructure, making integration of advanced RegTech tools complex and resource-intensive. 2. Data security and privacy. RegTech solutions process sensitive information, requiring robust cybersecurity measures. Compliance with global data protection laws like GDPR and CCPA adds another layer of complexity. 3. Initial costs. While RegTech reduces costs long-term, the initial investment in technology and training can be substantial, particularly for smaller firms. 4. Workforce adaptation. Adopting RegTech often changes workflows, which can face resistance from employees. Effective training and change management are essential to overcome this challenge. 5. Keeping pace with evolving regulations. The regulatory landscape and technology evolve simultaneously. Companies must stay agile, ensuring their RegTech solutions remain up to date. Section 4. Compliance Management Innovations. Innovations in compliance management are transforming how businesses operate in regulated environments. 1. Artificial intelligence and machine learning. AI and machine learning automate tasks like scanning regulatory updates and risk assessments. These tools predict compliance risks by analyzing historical patterns, allowing businesses to act preemptively. 2. Blockchain technology. Blockchain provides a transparent and secure ledger for compliance records, ensuring data integrity and simplifying audits. For instance, in supply chains, it tracks the journey of goods, ensuring compliance at every step. 3. Compliance management platforms. These centralized platforms track regulatory changes, manage documentation, and conduct audits. Equipped with analytics, they provide insights to improve compliance strategies. While these technologies improve efficiency, their adoption requires significant investment, training, and robust security measures. Section 5. Fraud detection and anti-money laundering. As financial systems become increasingly digital, combating fraud and money laundering is more critical than ever. 1. AI and machine learning. These tools analyze vast amounts of transactional data in real time, identifying anomalies that indicate fraud. Unlike static rule-based systems, AI adapts over time, enhancing its detection capabilities. 2. Big data analytics. Big data allows institutions to identify patterns across accounts and transactions, uncovering sophisticated fraud schemes that might go unnoticed otherwise. 3. Blockchain technology. Blockchain creates a tamper-proof record of transactions, making it easier to trace funds and audit activities. This transparency is invaluable in combating money laundering. Despite their effectiveness, these technologies face challenges like high costs and balancing security with user experience. Excessive security measures can frustrate legitimate customers, while underperforming systems risk regulatory non-compliance. Looking forward, collaboration between financial institutions and regulators will be essential. Sharing data and resources can enhance fraud detection and AML strategies, creating a united front against financial crime. Section 6. The future of RegTech and compliance. The role of RegTech will grow as regulations become more complex and markets become more globalized. Advancements in AI, blockchain, and machine learning will lead to even more sophisticated tools for compliance, fraud prevention, and risk management. The industry may also see greater collaboration between institutions, regulators, and technology providers. This partnership can standardize processes and create more efficient systems, benefiting the entire financial ecosystem. For businesses, investing in RegTech isn't just about meeting regulatory requirements. It's about building trust, improving efficiency, and staying competitive in an increasingly regulated world. Section 7. Technologies enabling better compliance. Compliance management has witnessed revolutionary advancements driven by technologies like artificial intelligence, AI, blockchain, and regulatory technology, RegTech. These innovations are shaping a future where compliance is efficient, accurate, and proactive. AI in compliance. AI has become a cornerstone in compliance management by automating repetitive tasks and improving accuracy. For example, AI tools monitor communications across platforms to ensure they adhere to transparency and data protection regulations. Additionally, AI's pattern recognition capabilities are vital for fraud detection and identifying compliance risks, such as money laundering activities. By analyzing transactions in real time, AI enables organizations to address irregularities proactively. Blockchain for traceability and security. Blockchain offers unmatched transparency and security. By maintaining immutable, time-stamped records, blockchain ensures traceability across complex supply chains. For instance, in industries like pharmaceuticals or manufacturing, blockchain ensures compliance with safety and quality regulations, providing a reliable audit trail. Challenges and considerations. While these technologies offer transformative benefits, they also introduce challenges. Data security and privacy are significant concerns, especially when sensitive information is processed. Integrating new systems with legacy infrastructure can be resource-intensive and complex. Furthermore, technology must complement skilled professionals, whose ethical judgment and expertise remain irreplaceable. Looking ahead, advancements in AI, blockchain, and analytics will further integrate compliance into strategic operations, turning it into a competitive advantage. Section 8. Interaction between regulators and fintech companies. The collaboration between regulators and fintech firms marks the intersection of innovation and oversight, shaping the future of the financial sector. Fintech's disruptive nature. The fintech companies, with their agile operations and disruptive innovations, are reshaping the financial landscape. From mobile banking and cryptocurrency to peer-to-peer lending, these advancements often challenge traditional regulatory frameworks. Many existing regulations, designed before the digital revolution, struggle to encompass fintech's dynamic models. The Regulators Balancing Act regulators face the dual challenge of fostering innovation while protecting consumers and ensuring market stability. They must balance being stringent enough to mitigate risks without stifling innovation. In response, regulatory bodies are adopting proactive strategies to better understand and oversee technological advances. Regulatory sandboxes and innovation hubs. Regulatory sandboxes offer a controlled environment where fintech firms can test new products under regulatory supervision. These frameworks provide insights for both parties. Fintechs refine their offerings, while regulators gain a deeper understanding of emerging technologies. Additionally, innovation hubs and outreach programs facilitate open dialogues, helping fintech companies align their solutions with regulatory expectations. Challenges in collaboration. However, this relationship is not without hurdles. The speed of regulatory adaptation often lags behind technological innovation, creating gray areas. For fintechs operating globally, inconsistent regulations across jurisdictions complicate compliance. Harmonizing standards remains an ongoing challenge, requiring greater international collaboration. Section 9. Challenges in implementing RegTech. RegTech promises streamlined compliance, cost savings, and operational efficiency. However, integrating these technologies into existing systems is a complex undertaking. System integration challenges. Many organizations rely on legacy IT systems that are often incompatible with modern RegTech solutions. Integration requires significant expertise and resources, with potential risks of downtime or vulnerabilities. Data stored in disparate formats further complicates seamless adoption. Data security and privacy risks. Processing sensitive data makes RegTech systems attractive targets for cyber attacks. Organizations must implement robust cybersecurity measures to protect against breaches. Additionally, compliance with stringent data protection laws, such as GDPR and CCPA, adds complexity to RegTech deployment. Financial barriers. The initial costs of adopting RegTech, including investments in infrastructure and staff training, can deter smaller firms. Although long-term savings are substantial, the upfront expenditure often remains a barrier. Resistance to change. The workforce resistance is another challenge. RegTech often transforms workflows, which may lead employees to perceive these changes as threats to job security. Effective change management, emphasizing how RegTech can enhance roles rather than replace them, is essential for successful adoption. Regulatory complexities. Ironically, the very regulations that RegTech aims to manage also pose challenges. As rules evolve, keeping systems updated is critical, particularly for firms operating in multiple jurisdictions. This requires adaptable, future-proof RegTech solutions. Technological obsolescence. Rapid technological advancements mean that today's cutting-edge RegTech could quickly become outdated. Organizations must be prepared for continuous investments in upgrades and training to stay ahead. The path forward. Despite these challenges, the future of RegTech is promising. Ongoing advancements will make solutions more secure, user-friendly, and cost-effective. As businesses increasingly prioritize compliance as a strategic imperative, RegTech adoption will become a necessity rather than an option. Conclusion. The evolving interaction between regulators and fintech firms underscores the need for collaboration to navigate the rapidly transforming financial landscape. Regulatory sandboxes and innovation hubs exemplify how mutual understanding can create a balanced ecosystem for innovation and oversight. While challenges in RegTech implementation persist, including system integration, security, and workforce adaptation, these obstacles are surmountable with strategic planning and commitment. By embracing these technologies, businesses can not only meet regulatory demands, but also build stronger, more sustainable operations. The future of compliance, fintech, and RegTech is interconnected, promising a landscape where innovation and regulation coexist to create a more efficient, secure, and inclusive financial ecosystem. Businesses that invest in these technologies today will be well positioned to thrive in a regulated yet dynamic world.